Hi guys. Today we will analyze Kohl's Corporation stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock is a median performer in the overall market. Both the short-term and long-term trends are positive. Support levels are around $59 and $55. Next support levels are around $51.40 and $46. Resistance level is around $64. In the last month the stock has been trading between $56.30 and $63.40 range. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 3.2 million. This is a good sign as it is always nice to have a liquid stock. Rumors. The stock's price is $61 at the moment. Kohl's is in news over rumors about potential buyout proposals. Earlier this year, the company received an offer of $64 per share, from a consortium led by Overvalued and Acacia Research. Sycamore Partners then offered to buy the company for at least $65 per share. Management rejected those offers, saying these offers do not adequately reflect the company's value in light of its future growth and cash flow generation. With the investor interest continuing, we may see a higher offer in the low 70s. So, there is a good chance that we will eventually see a buyout. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 1% per year, for last 5 years. We see that the average profit margin of the stock has been around 3% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 121% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Kohl's company: bad, average, and good. First scenario. Kohl's will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, -2%. Future profit margin would be a low, 2%. Future free cash flow to net income rate would be a low, 80%. In this case, the fair value of the stock today would be $30. Second scenario. Kohl's will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 0%. Future profit margin would be average, 3%. Future free cash flow to net income rate would be average, 90%. In this case, the fair value of the stock today would be $46. Third scenario. Kohl's will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 2%. Future profit margin would be high, 4%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $68. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 6.47. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Kohl's, analysts forecast growth rate around 2% per year in next 5 years, and future P/E around 8. Again, I will use 3 different scenarios for Kohl's company: bad, average, and good. First scenario. Kohl's will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, -2%. Future PE would be a low, 9. In this case, the fair value of the stock today would be $21. Second scenario. Kohl's will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 0%. Future PE would be average, 11. In this case, the fair value of the stock today would be $30. Third scenario. Kohl's will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 2%. Future PE would be high, 13. In this case, the fair value of the stock today would be $43. As you can see, today the stock is overvalued, $61, even if we expect the company's high performance in future. The company's profitability and future growth are quite bad. And the stock is currently overpriced. The share price is being affected by takeover speculation. So, the stock is trading at all-time highs. It's a highly speculative stock at the moment. The current stock's price is $61. I think we will eventually see a buyout at $72 or $74 per share. So, in the best-case scenario, you may earn extra $13 per share, if you buy the stock now, and hold it until the buyout. Is the juice worth the squeeze? Probably not at current levels. But if the stock drops below $50, I will definitely buy the stock. I like how it worked out for Activision Blizzard stock. If you already own this stock, just hold it. If you don't own the stock, I would recommend to wait for a pullback, $46 or $48, before considering an entry. Company strengths. Kohl's is the largest department store chain in the U.S. It operates 1,162 stores in every U.S. state, except Hawaii. The company's stores cater to middle-income customers shopping for their families and their homes. About 34% of sales are from private and exclusive brands that are tailored specifically for Kohl's. The company is taking various initiatives, like focusing on their active and casual wear assortments, women's apparel, and introducing Sephora shops in the store, to increase revenues. Kohl's has an attractive digital business, as well as a good omni-channel strategy. An omni-channel customer is 6 times more valuable than a digital-only one. In any case, Kohl's has a very attractive and growing digital business, with 1.7 billion website visits per year, and 18 million active app users. Kohl's owns 35% of its stores, and if it needed that capital, it could do a sale-leaseback transaction. Risks. Sales at Kohl's are still not back to pre-pandemic levels. It's a highly competitive business. The apparel business, about 70% of Kohl's sales, is increasingly dominated by discounters. Kohl's must continuously offer discounts and coupons to attract and retain customers. The company's investments in Sephora shops, and increasing labor cost and wages, would impact its costs and operating margins. Many of Kohl's key brands, such as Nike and Adidas, are investing heavily in their own direct-to-consumer efforts, reducing the importance of wholesale partnerships. Another risk is one that every retailer faces: the health of the overall economy, and the strength of discretionary consumer spending. The company's return on equity of 20% is worse than the rest of the industry. The industry average return on equity is 30%. The company's profit margin of 4.8% is below the industry average of 6.5%. Its return on assets of 6.2% is below the industry average of 8%. Kohl's is expected to show a very small growth in revenue. In the coming 5 years, the revenue will grow by 1 to 2% yearly. The earnings per share is expected to grow by 5% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.